Okay, so like I said, there is a saying that history repeats itself, and in technical analysis, we believe on what price has done in the future to repeat. Sorry, what price has done in the past, it will repeat in the future. Okay, so as a trader, you need to be able to identify these candlestick patterns. Okay, with these candlestick patterns, you can tell when a trend is coming to an end and when a trend is about to change from bearish to bullish. Okay, so the first candle I'm seeing on the chart right now is called this candlestick. This one you see here, it's spinning top. You can call this a spinning top, or okay, because it forms in a downward trend, you call it a spinning bottom. A spinning bottom. If it forms in an upward trend, you call it a spinning top. I hope you get that. So when you see this candlestick pattern, when it forms in a downward trend, it's an indication that the preceding trend, which is bearish, you can see before the formation of this pattern here, the trend was bearish. So immediately this candlestick forms, it indicates that the sellers, the bears are becoming exhausted, and there's a possibility for a trend to change its direction from bearish to bullish. Are you with me? So when you see this pattern in a downward trend, when this pattern forms in a downward trend, you should look out for opportunity to buy. You should look out for what? Opportunity to buy. Now, in this case, you can see now this is something you need to also check. You can see this candle, the body here is a bullish candle. It is a bullish candle. The preceding trend was what? Bearish. And this spinning top that formed here, the body is bullish. Now, when the body is bullish, you don't have to wait for the next candle to close before you buy. It is after the formation of this bullish spinning top you would execute a buy. So what you have here, this is where you would have entered buy. Immediately this candlestick closed. Okay, immediately this candlestick closed. I believe you are able to identify the closing of the candle and the opening of the candle stick. This is the opening. Remember, this is a bullish candle. So the closing price is always above the opening price. So this is the opening price of this candle, and this is the closing price of this candle. And this is the highest price this asset got to during this session. And this is the lowest price it got to during this session. So we have the open, close, high, low. Remember, I told you those are the four prices displayed on the chart. Those are the four information you deduce from the candlestick. Okay, the open, high, low, close. That is why the chart is also referred to as OHLC chart. OHLC, that's the abbreviation for open, high, low, close. Now, since the body is bullish, it's an indication that we have few buyers who are willing to buy. It means some traders have executed buy trade. That's what it means. So one can execute a buy after the close of this candle. But if the body of the candle is bearish, is red, the body is red, it indicates that we still have some traders, few traders, who are still willing to sell. Those traders are still willing to sell and they can still push the price down. So in that case, you should wait for the next candle to close bullish. Are you with me? You should wait for the next candle to close bullish before you execute a buy trade. Remember the plan after the formation of the spinning bottom is to buy. That is the plan, right? But if
Yeah.
the body is bearish, we can't just jump in and start buying. We need to be sure there are buyers in the market before we execute a buy trade. And that is why we need to wait for the next candle to close. It is the close of the next candle that will confirm that okay, there are buyers in the market. If the next candle that closed after the spinning bottom, the bearish spinning bottom is bearish, we cannot buy. We still have to wait until the next candle closes bearish. Okay, let me show you an example here now. Okay, see what we had here. This is also a spinning top. This bearish spinning top. The trend before the formation of this spinning top is what? Bullish. You can see price was bullish before the formation of this spinning top, right? So after the formation of this spinning top, this is where you would have entered the sell trade. This is where you would have entered sell after the close of the candle. Are you with me? You would have entered sell. But if the body of this candle was bullish, just like what we have here, can you see this? This is
Mm,
also a spinning top. This is also a spinning top. And you can see the preceding trend before the formation of this spinning top is bullish. And the spinning top that formed there is still bullish. This indicates that there are still buyers in the market. There are still some traders who are still willing to push price up. Are you getting me? That's what this indicates. This is a bullish spinning top. So what do? We need to confirm that there are sellers in the market because our plan after the formation of this spinning top is to sell. So for us to be sure that okay, there are sellers in the market and that will be the right time to take the risk, we need to wait for the next candle. So in this case, you would have waited for this candle to close. You wait for the candle to close before you execute a sell trade. Are you with me? Are you following? You wait for the candle to close before you execute a sell trade. If you have done that here, you would have made profit. If you had followed the rules here, you would have made profit. If you had followed the rule here, you would have made profit. Okay? So that is how you trade the spinning top or spinning bottom candle. If it forms an upward trend, you look for opportunity to sell. If it forms in a downward trend, you look for opportunity to buy. Let me show you more examples on the chart. Now, this chart we're looking at now is a 4-hour time frame. Let's talk about the different time frames. You have from the monthly down to 1 minute. So you can use the monthly chart for your analysis. That's the higher time frame. You have the weekly, okay? You have the weekly, you have the daily, you have the 4-hour time frame down to 1 minute time frame. So we are currently on the 4-hour time frame. And on the 4-hour time frame, one candlestick shows you price action within the period of 4 hours. Okay? The candlestick on the 4-hour time frame shows you price action, price movement within the period of 4 hours. So if you are viewing the 4-hour time frame, every 4 hours, a candle will close, a new one will open. Every 4 hours. So in a day, if the time frame you're working with is 4 hours, you would have 6 candles on the 4-hour time frame. 6 candles on the 4-hour time frame makes up one candle on a daily time frame. I hope you get that. If you are viewing the daily time frame, a candle on a daily time frame shows you price movement, price action within the day, within 24 hours. That is the daily candle. If you're viewing the weekly time frame, one candle shows you price action for the week. Are you with me? Then if you are viewing 1 hour, on 1 hour you will have 24 candles in a day. So every 1 hour, a candle closes, a new one open. Candle closes, a new one open. Every 1 hour. And you have 24 hours in a day. I hope you're getting it. Okay, so let me show you more examples of the spinning top and spinning bottom. Okay, so this is a spinning bottom. Can you see this? This is a spinning bottom. The trend before the formation of the spinning bottom is bearish. You can see it was bearish. So you have to wait for this to close and the body is bullish. And since the body is bullish, you don't wait for the next candle to close. So you would have executed a buy trade after the formation of this spinning bottom. I hope you're getting me. Okay, you would have executed a buy trade after the formation of this spinning bottom, though the body of this spinning bottom is a little bit big, okay? But we can call this a spinning bottom, though not a valid one, okay? Not a valid, the body of the spinning bottom shouldn't be this big. Okay? It shouldn't be this big. But looking at the high and the low, the week above and the week below, you can see that the week above and the week below are equal and the body is not that big. Okay, that's why I just qualified this to be uh, a spinning bottom. Okay, so this is another example of a spinning top. You can see this. This is another example of a spinning top. So in this case, what would you have done here? You would have waited for this next candle to close bearish. That is the rule, right? Before the formation of this spinning top, price was bullish. From this point to this point, price went up before the formation of this spinning top. And this is a spinning, bullish spinning top. You can see the body is bullish. So you would have waited for this next candle to close before you sell. So this would have been your entry in this case. Okay, let me show you another example. This is another example of a spinning bottom. Let's see. This is an example of a spinning bottom. In this case, the body is bearish. Bearish. You would have waited for this next candle to close bullish before you buy. Let's see. You would have waited for this candle to close bullish. Now, when you executed the trade after the close of this next candle, which is a bullish candle, what happened? Price didn't go immediately to your direction. Didn't go your direction instantly, right? Came back, then went back up. Let's see. So you need to just know what you're doing. If you are the type that gets scared or panic, many would have closed their trade because of this pullback. Many would have closed their trade. But if you know what you're doing, you would have left the trade and you would have made some good profit on the trade. Okay, let me show you one or two more examples. Then we'll look at further candlestick pattern. So this is also a spinning bottom. You can see this is a spinning bottom. The trend was bearish. Spinning bottom formed. You wait for this next candle to close bullish. You can see you wait for this next candle to close bullish before you buy because the body of this spinning bottom is bearish. Can you see that it is bearish? So you wait for this next one to close bullish. This is the candle that confirms that okay, we have buyers, we have those who are willing to buy. Okay, it indicates that demand has started increasing and one can just take the risk buying and took the risk after the formation of this candle. And what happened? Price went in your direction, made some good profit there. Okay, okay, I saw from another one here. You can see this also. This is a spinning top. Can you see this? This is a spinning top. The trend before the formation of this spinning top was what? Bullish. It was bullish. Can you see? It was bullish. Price was going up from this point to this point before this pattern formed. So the rule is, since the body is bullish, we wait for the next candle to close bearish before we sell. You can see that. Okay, so that is how you trade using spinning top. Okay, so this is also a spinning top. Spinning top. Wait for this next candle to close bearish, then you take your sell trade. I hope that is clear. So the next candlestick pattern we'll be looking at is doji candle. The doji candle pattern is similar to the spinning top or spinning bottom. It's just that the doji does not have a body. Okay, this is an example of a doji. The doji does not have a body. So doji sometimes is referred to as an indecision candle. Okay, we can say during this session, during this 4-hour session, neither the buyers nor the sellers had the upper hand. Okay, neither the buyers nor the seller had the upper hand. Doji, D-O-J-I, doji, D-O-J-I. So this is doji, okay, D-O-J-I. So you can see it does not have a body, but a spinning top will have a small body. Okay? A spinning top should have a small body, but a doji does not have a body. And that is why it is referred to as indecision candle. When you see a doji, you know there is indecision in the market. So you know there is indecision in the market. So let me show you on the chart what happens after the formation of a doji. What price does after the formation of a doji. Let me see. Let me look for a very good example. Okay, so this is an example of the doji. You can see this. Can you see this? The doji does not have a body. Now, the trend before the formation of this doji, you can see price dropped. The price was bearish before the formation of this doji. So this doji indicates that the sellers are becoming weaker. Okay? It indicates that the sellers are becoming weaker and there's a high probability that price might change its direction. There's a high probability that the buyers will come in and start buying from this point. Those who sold from this point, if they want to take profit out of the market, they would have to buy. So what played out is that those who sold from this point want to take profit out of the market. And if they want to take profit out of the market, what would they do? They would have to sell, right? They would have to sell or buy, okay? They would have to place a buy trade since they sold from this point. For them to take profit, they would have to buy. Are you getting me? So if they start buying, what happens? The demand will start increasing. Supply will start dropping. So when you see a bridge like this, it implies that the demand has started decreasing and supply has started decreasing and demand has started increasing. So that's what played out. Now, when a doji forms, it is not after the close of the doji you execute a trade. Okay, you don't execute a trade. Remember, I said it's an indecision. This just tells us that the sellers are becoming weaker and buyers are showing up in the market. But price can still decide to just keep going down. It can just keep going bearish, just keep dropping. So you don't just jump in after a formation of the doji candle. You have to wait for the next candle, just as we have it here. You have to wait for the next candle to close bullish before you buy. Are you getting me? You wait for the next candle to close bullish before you buy. So your entry would have been after the close of this bullish candlestick. That is where you have executed the trade. I hope you're getting me. So that is it for doji. Now here also you have doji. You can see this. This is a doji. The trend before the formation of the doji. You can see the trend before the formation of the doji. There is it. There is the doji identified now. The trend before the formation of the doji was bullish. Okay. Uh, I think this was what I identified. Yeah. This is it. Yeah. This is it. This is doji. This is doji. You can see. This is doji. This is doji. You can see. Right. This is doji. This is doji. This is this has a small body. Okay, it has a small body. When I zoomed out, you can see. You now see that it has a body. So if you look at what has been playing out here, this is a doji. The rule is after the formation of a doji, you wait for many would have jumped in, start selling from this point because they saw a doji. The think price will drop. They will sell. Some will sell here. But the rule is that you wait for the next candle to close bullish or sorry, bearish since you want to sell. So you can see price kept on going up. Despite that, we had a doji here, we had a doji here. The price stayed, and you can see that after those doji, no bearish candlestick formed after them. The bearish candlestick didn't form after them. So if you had entered after the formation of this doji, you would have made losses here. The rule is wait for the next candle to close bearish. So this is where we would have considered selling. This is where you would have considered selling or sell after the close of this bearish candle. These are the first bearish candlestick that formed. You can see that. So that is how you trade doji candle. So let me look for more examples. So here also, this is a doji. You can see this candle has no body. You can see here also, this is a doji. After the formation of this doji, you have to wait for this next candle to close before you sell. And here also, formation of this doji, after price drop, you had a doji here. You wait for this next candle to close bullish. It is after the formation of this bullish candle, you enter buy. Can you see that? Can you see that? Okay, let me show you one or two more examples, then we'll look at other candlestick pattern. You can see here also we had a doji. The next candlestick close. Here is what happened. If you had entered sell after the close of this candle, you definitely would have lost on this trade. Okay, so you not always win all the trade. Most times doji will form and do otherwise. Tries to go in the opposite direction. It happens. You can't win all your trade. There are some trades you would that won't go in your direction. Just as we have it. I saw another. Okay, this was one. This one failed. You can also see this one also. You can see after the formation of this doji, wait for this next candle to close. What happened? Price went down a little. You can see it went down a little. You so probably would have made small profits here. And what happened now? This candlestick is a spiraling bottom, right? And the next candlestick closed bullish. This tells you that the trend is changing from bearish to bullish. So if you have made some profits here, after the formation of this candlestick, this spiraling bottom, and this next candlestick closed bullish, at least you would have taken very small loss on this trade, very small loss on this trade. So sometimes it will fail. Remember, I said there are two ways to define the trend of the market. We have technical and we have fundamentals. So, for example, after the formation of this, let's assume this candlestick formed around 1 p.m. or 2 p.m. Nigerian time. Let's assume it formed around 1 p.m. or 2 p.m. Nigerian time, and a news was released by let's say 2:30 p.m. Nigerian time. Let's say the news was released 2:30 Nigerian time, and the news was negative for the dollar. Let's say the news was released for dollar, and the news that was released was negative for the dollar. What will happen? The dollar will lose value. So it could be that the major news was released at this point, and that is why the dollar lost value against the Great Britain pounds. That is the pair we are looking at, GBP USD. So if a major news is released for USD and the news is negative, then GBP USD will buy. But if the news was positive for the dollar, then we would expect, so most likely this doji would have played out. This doji pattern would have played out as expected. But because a major news was released and that news was negative for the dollar, then dollar had to lose value, and that could be the reason price went up instead of going bearish. Are you getting me? So sometimes those technical setup might not play out. Probably the major news was released. Are you getting me? So here also we had a doji. Yes, this candle has nobody. We had a doji. The next candle still closed there. You would have sold there. Okay, you would have sold there and you would have made some profit at this point. Are you following? So that is how you trade doji. You can see this one also. No, this is not a doji. This one has a small body. This is a spinning bottom. The spinning bottom. You can see it. Okay, this one is a spinning bottom. Not a doji. So sometimes you need to zoom out. You need to zoom out to see the candle very well to be sure it does not have body. So here also, this one does not have a body. This is a doji. This is a doji. You can see the next candlestick closed bearish before this. You can see that. So this one closed bullish. So this would have been an opportunity to buy, right? This is a doji. Bearish candle. Wait for the next candle to close bullish. Take a buy. You also have two doji candles. Take that one. Let's see. Take a buy. Okay. Let's look at that. Find one more example of the next candlestick pattern. This is a spiraling top, a bearish spiraling top. This one also is a bearish spiraling top. Let's see, bearish spiraling top, bearish spiraling top. This is a spiraling bottom, spiraling bottom. So you can see after the formation of the spiraling bottom, you wait for the next candle. This also is a spiraling bottom. You can see spiraling bottom, spiraling bottom. If you had entered buy here, see you would have made a loss on this trade. You had entered buy. So the rule is if the body is bearish, wait for the next candle to close bullish before you buy. So what we have here is spiraling bottom. that jumped into buy from this point, what would have happened? You would have made a loss on this trade. So if you had patiently waited for this to happen, for this candle to close, this is the bullish candle, the first bullish candle that formed after the formation of the standing bottom. You would have entered buy, you would have made some good profit here. Okay. After the class, you should go back on the charts and start identifying these patterns and see how the market reacted to those patterns in the past. That is what is called backtesting. Backtesting. Yeah. So that is it for Doji and finding candles. I hope that is clear. Any question on this before I move to the next candlestick pattern? Let me know in the comment section. If you have any question, let me know in the comment section. So the next pattern is hammer. The next pattern would be, let's look at hammer candle. Hammer candle. Are you still here? Are you still here? Are you still here? Any question on Doji and finding candle before I move to the next candlestick pattern?
Stick.
Are you still here?
Stick position.
I'm not seeing comments. Are you still here? I don't understand your question. What like you mean from those candles? From those candles, you know when to buy or sell. That is what those candlestick pattern tells you. It tells you when a trend is coming to an end and when a trend is about to change its direction. That is what you use the candlestick pattern. This is a strategy. As a trader, you must have a strategy, a reason for buying and a reason for selling. Okay, you don't just open your chart and it's buy or sell. There must be something you're seeing on the chart that tells you that there's a high probability that price is going to go up from this level or price is going to go down. And that is why you are learning candlestick pattern. When you see this pattern, like I said, in an upward trend or downward trend, you know what to do. Okay? So hammer, you can see this candle. This candle is here is called hammer. Okay? It is called hammer. This is what an hammer looks like. Okay, this is what an hammer looks like. It is called an hammer when it forms in a downward trend. This candle is called an hammer when it forms in a downward trend. That pattern can also form in an upward trend. Please take note. This hammer candle can also form in an upward trend. When it forms in a downward trend, it is called hammer. When it forms in an upward trend, it is called hanging man. Note that when you see this pattern, when it forms in a downward trend, it is called hammer. When it forms in an upward trend, it is called hanging man. Okay, now this candle called hammer, when it forms in an upward trend, it indicates that the sellers are becoming exhausted and the buyers have overpowered the sellers. That's what it means. Buyers have overpowered sellers, and there's a high probability that price is going to start going up from there. That's what it means. As we have it, you can see after the formation of this hammer, what happened? Price went up. Okay, so hammer candle is expected to form in a downward trend. So let's look for. So you can see this also. This is an hammer. Can you see this? This is an hammer. How do you know the candle is an hammer? The wick below it must be 2 times the body. Note that down. Okay, the wick below must be 2 times the body. Okay, So this is called an hammer because the wick below is 2 times the body. And what happens to price after the formation of the hammer? Okay, it was bullish. Now take notes of this. The body is bullish. If the body is bearish, then you have to wait for the next candle to close bullish before you buy. Please note that if the body of the hammer is bullish, you don't have to wait for the next candle. But if the body is bearish, you have to wait for the next candle to close before you buy. I hope that is clear. Let's look for more example. And like I said, when this candlestick pattern forms in an upward trend, it is called an angry man. It is called an angry man, just as we have it here. This is an angry man. Can you see this? It is an hammer, but this hammer formed in an upward trend. It formed in an upward trend, so it is called an hanging man. Okay, this is an hanging man. You can see the wick below is 2 times the body. So this is an hammer, but because it formed in an upward trend, it is called hanging man. Okay, and when you see an hanging man, you know it's time to sell. You should be looking for sell opportunity after the formation of an hanging man. I hope you are following. I hope you are following. Okay, so that's an hanging man, that's an hammer. So let's look for examples of hanging man and hammer candlestick pattern on the chart. So this is another hammer. Can you see this? This is an hammer. This is an hammer. With below, you can see that it's 2 times the body. This is an hammer. And what happened after the formation of the hammer? Price went up. Here also we have hanging man, right? This is an hammer, but this hammer formed in an upward trend. The preceding trend was bullish, right? It was bullish. So, what's it called? An hanging man formed here. You can see. So this is an hanging man. This is an hanging man. So price is expected to drop. But in this case, after the formation of this hanging man, what happened? Price had to go up a little, not even little. Buyers came in and pushed price up aggressively. When you see this kind of candle, you know a major news was released. This kind of candlestick indicates that at this time, a major news was released. That's why you have this kind of strong bullish move before the bearish move. Major news was released. Okay, that was why price went up before going down. But after the formation of this, you know that a lot of people would have expected sell after the formation of this candle. A lot of people would have expected sell, and most of them would have their stop loss at this level. So what they did was to first of all clear all the stop losses. We call this level an area of liquidity. So we'll talk about liquidity in subsequent class. Okay, so this is an area of liquidity. So what they did was to clear the highs before pushing the price down. Okay, so that is it. I told you that sometimes these things will not play out because a major news is expected or a major news will be released. That's what played out here. You can see major news. I'm sure the major news was released at this point. That's why this didn't play out immediately. But later on, it played out. As you can see, price went down. You can see that. Okay. And that's why I said as a trader, as a technical trader, you also need to be aware. So when you see this pattern, let's say this news was released 2 p.m. and this pattern formed by 12 p.m. As a trader, since you know that the major news will be released, you should wait for that news to be released before you execute the trade. If you execute the trade before the news is released, then you're going to take a loss on this trade. Okay? Then if you want to go in again, you want to retake the trade or you want to re-enter the trade, and just wait for price to come back and close below the close of this hanging man before you enter again. But most times, most traders don't have the confidence to re-execute the trade, to re-enter the trade. Understand? So when you know emergency news to be released and you have your candlestick pattern, if you wait for that news to be released, see how the market will react. before you jump in. I hope that is clear. Okay, let me look for one or two more examples. Armor. This is also an armor. Okay, this is an armor. Why is it an armor? The width below is this one is like 3 to 4 times the body. You can see that it's like 3 to 4 times, and the rule is that the width below should be 2 times the body. So this is an armor, but a bearish armor. This is a bearish armor. You can see the body is bearish. So what would you have done at this case? You would have waited for this next candle to close bullish before you execute buy. You would have waited for this candle to close bullish before you execute buy. Now, it's also possible to have entered buy after the formation of this bearish candle. Remember, the rule is that you wait for the next candle, but there are ways you can execute a buy, okay, after the formation of this bearish armor and still take the trade for. That's I'll teach in the subsequent class. Using multiple time frames, top down analysis. Okay, so more as a beginner, wait for the next candle to close. As a beginner, just wait, patiently wait. Okay, but as an experienced trader, I wouldn't wait for this next candle to close. I would have entered buy after the formation of this candle. Okay, I would have entered buy. What I would have done there was to go down to lower time frame. We are on 4 hour. After the close of this candle, I would have gone down to 1 hour time frame or 15 minutes time frame. And if I go on those time frame and I'm able to identify a bullish reversal pattern on those time frame, okay, let me just show you. Let me use this as an example. Let's go to 1 hour. So after the formation of this candle here, let's see what we had on 1 hour. Let's see. So on 1 hour, we have what looks like a bullish reversal pattern. You can see, though not a valid bullish reversal pattern. You can see. So after the formation of this, I need to be able to identify a bullish reversal pattern. So since we don't have it on 1 hour, let's see 15 minutes. Okay, so you can see on 15 minutes. Can you see what we have on 15 minutes? You can see on 15 minutes. We have this is an armor on 15 minutes. So on 15 minutes is set for buy. This is an armor. You can see the width below is 2 times the body here. You can see. So before the close of that 1 hour, that 4 hour, what's it called, armor. Before the close of that 4 hour armor, we already had a bullish setup on 15 minutes time frame. So for that reason, I wouldn't wait for the next candle to close bullish. Since on 15 minutes, if the only time frame we were trading with is 15 minutes time frame, we would have entered buy after the formation of this armor, right? We would have entered buy if there was no 4 hour chart, if there was no 1 hour chart. If we're just trading the 15 minutes time frame, we would have entered buy after the formation of this armor. So immediately that candlestick closed on 4 hour as an armor, and I came down to 15 minutes and I saw that okay, if I was just trading the 15 minutes time frame, I would have entered buy here. So I wouldn't wait for the next 4 hour candle to close. I would have executed my buy trade from this point. I would have entered buy from this point. You can see I would have made some very good profit on this trade. Okay. So we'll talk about top-down analysis in subsequent class. So let me go back and let's identify more AMA candles. Let me look for one or two patterns. AMA, we are looking for AMA and Angiman, okay? AMA and Angiman. AMA and Angiman. So you can see this. You can see this candle. This is an AMA. This is an AMA. Okay? This is a bearish AMA. So in this case, you would have waited for this candle to close bullish before you buy. You would have waited for this candle to close bullish before you buy. Okay? Let me look for one more example. So you can see this is an Angiman. It's an hammer. For this hammer formed an upward trend, as you can see, price side going up from this point, and it formed an Angiman. And what happened? Price drop. But in this case, like I said, the rule is wait for the next candle to close bearish since the body of this candle is bullish, you wait for the next candle to close bearish. If you had waited for this candle you see here is as a result of a news. A major news was released. When you see long body candle like this, you know that a major news was released. That's why it is when the major news is released, you see price move so very fast. When you see long body candle like this, there was a major news. Okay, so it was bearish. Now in this case, you can see that our price has already gone far. So entering a sell trade after this long candle will be a very high risk. Are you getting me? It will be a very high risk. So price has already gone far. So this trade, personally, I would not take this trade. I wouldn't take this trade. If this next candle had closed, let's say below the open of this candle or below the this low, and these are the areas I would consider executing the trade. But this one has gone far from this level and far from this low, the low of this candle. So I wouldn't take this type of trade unless price comes back into this area. Then I might consider taking the trade. Just as you can see what happened here, price came back to this area, even went above it, then came back. So I would have considered selling after this candlestick closed because it closed below the close or the opening of this candle. See, this bearish candle closed below it. So this is where I would have considered selling and not from this point. You can see. And even before price went back up here, you can see what happened here. We had opportunity to buy here. This is an hammer and the next candle closed below. So we would have also taken advantage of this buy, would have made profit here and also look for opportunity to sell after this candlestick closed below the opening of this candle. I hope you are following. I hope you're understanding the concepts. I hope. Okay. So let me just for one more example. I'm also looking for hanging man, but I've not seen hanging man. I've not seen hanging man. Okay. I've not seen hanging man. So if I'm unable to find an hanging man, then at your own convenient time, look for hanging man on the chart. Look for hanging man on the chart. Okay. So that is what an hammer looks like. Let me look for one more example of hammer. One more example. Okay, this is another good example of hammer. Okay, you can see this. This is an hammer, a bearish hammer, bearish hammer. So you wait for the next candle to close bullish before you buy. You can see that. Wait for the next candle to close bullish. Then this will be the last one there. You can see this. This is an hammer. This is an hammer, and this is a bearish hammer. You wait for the next candle to close bullish before you buy. And you see that. Okay, so that is it for hammer and hanging man. Okay, when an hammer forms an upward trend, it is called hanging man. Okay, I hope that is clear. So while we are looking for other candlestick pattern, if we see hanging man, then I will point it out. Okay, I'll point it out. So the next candlestick pattern I want to talk about is the shooting star. This candlestick is called the shooting star. You can see it's an hammer, but this is an inverted hammer. Can you see that? It is an hammer, but in this case, the hammer is inverted. So when an inverted hammer forms in an upward trend, it is called a shooting star. When an inverted hammer forms in an upward trend, it is called a shooting star. And when this inverted hammer forms in a downward trend, if you find this in a downward trend, you find this pattern in a downward trend, it's called the inverted hammer. But in an upward trend, it is called shooting star. Okay? The downward trend, when it forms, it is called inverted hammer, and it forms an upward trend. It is called shooting star. So this is a shooting star. So when you see a shooting star form in an upward trend, you should look for sell. Okay, you look for opportunity to sell. Now, this shooting star has a body. The body could be bearish and it could be bullish. If it is bearish, you don't wait for the next candle to close bearish. You sell immediately the candlestick closes. But if the body is bullish, you wait for the next candle to close bearish before you sell. I hope that is clear. I hope that is clear. So let's look for examples of shooting star and inverted hammer on the chart. Okay, so you can see this here also. This is a shooting star. This is a shooting star also. But the body of this shooting star is bullish. So we cannot execute a sell trade. But the next one that formed as a shooting star and the body is bearish. You don't have to wait for this next one to close. So you execute the trade after the formation of this shooting star. You don't have to wait for the next candle because the body is bearish. I hope you get that. Let's look for my example. So this is an example of an angry man. You can see this is an hammer that formed in an upward trend. Can you see? This is an angry man and it's a bearish angry man. It could be bullish, but since the body is bearish, we don't wait for the next candle to close before we sell. We sell after the close of the bearish angry man. So this is an example of an angry man. Okay, this is an angry man. You can see this. This is what a shooting star. This is what a shooting star. And the body is bearish. So you don't have to wait for the next candle to close. You sell after the close of the candle. Place a sell trade after the close of the candle. This is also a shooting star, you can see. This is also a shooting star, a bearish shooting star. So you don't wait for the next candle to close. You sell after the close of the shooting star. I hope you are following. Okay, let's move to the next. Let's see Simplified. Okay, this also you can see this is a shooting star. Okay, we can also call this an angry man. Okay, this is an angry man. This is a shooting star. Bearish angry man, then a bearish shooting star. Strong indication that price is likely going to drop. You can see. So you would have sold after the formation of this shooting star. I hope you're getting me. Okay, this is not complicated. Like I said, you need to also spend time on the chart so that when this pattern forms, you are able to identify them. Okay, it's instant. It's not limit trade. It is instant execution. You wait for the candle to close, then you execute the trade immediately, not pending orders. You don't use pending orders. It's instant execution. I hope that is clear. Instant, yeah. So this is an angry man. This is an angry man. But in this case, this angry man is a bullish angry man. You see the body is bullish. So in this case, you would have waited for this candle to close. You would have waited for this candle to close bearish before you sell. Okay, so let's keep moving. Moving up. This is a shooting star, a bearish shooting star. This is a bearish shooting star. This is a bearish shooting star. This is a bearish shooting star. Okay, you look for sell after the formation of this bearish candle. Okay, this is a shooting star. This candle here. See this. This is a bearish shooting star. After the formation of this candle, don't wait for the next candle to close. You execute your trade after the close of this bearish shooting star. I hope you're following. These things are not difficult. They are not too complex. Okay. You can see this is the shooting star. This is the shooting star. So you have executed sell after the formation of this shooting star. What happened after you executed the trade? The price went in your direction immediately. No, it took several hours, almost a day. Almost a day. You have 1, 2, 3, 4, 5. 5 candlesticks formed before the market went in your direction. Okay, so I believe, I'm sure, a major news was released. Okay, a major news was released at this time, and that's why you see this long body candle. A major news was released. Let me see the time here. Today afternoon Nigerian time. It's around 1 p.m. Nigerian time. 2 p.m. Nigerian time, and that is when the United States release most of their news. 2 p.m. 2:30, between 2 and 5. That is when the United States release their news. 2 p.m. Nigerian time is I think 8 a.m. in, in is 8 a.m. No, 2 p.m. 2 p.m. in Nigeria is 8 a.m. in America, the United States. Okay, so that's when they release their news. Okay, so let's see if we can still find one or two more examples. My boy is awake. I need to just say hello to him. Okay, so we have this is another shooting star. This is a shooting star. See, this also is a shooting star. This also is a shooting star. So you look for sell opportunity at this point. Okay, so that is a shooting star. That's a shooting star. Okay, Bobo, I'm coming. I'm coming. I'm coming. I'm coming. Okay, so let's see. Let's find more examples. Okay, this is a shooting star. You can see this. This is the shooting star candle. The bearish shooting star. So you sell after the formation of that shooting star. Okay, so I've shown you what an angry man looks like. I've shown you what a shooting star looks like and how you should treat them when they form on the chart. You can see this also. This is a shooting star. This is a
Hello?
shooting star. And the next candle closed bearish. So you have executed sell after the formation of this bearish candle. Not after the close of this shooting star. You can see the body is bullish. So you have waited for this next candle to close bearish for you sell. Okay.
Hello?
So at your own time, I've been trying to look for a what's it called? Trying to look for inverted armor. Okay, but I can't find. I've not seen an inverted armor. Okay, this is what an inverted armor looks like. Let me just use this as an example. Okay, if this had formed in an upward trend, this will be a shooting star. But it formed in a downward trend. This is an inverted armor. This is an inverted armor, and you can see the body of the inverted armor is bearish. So in this case, you would have waited for this next candle to close bullish. It is after the close of this bullish candle, you would execute a buy trade. Here, this is angry man. You can see this is an angry man, bearish angry man. So you don't have to wait for the next candle to close bearish before you sell. It is after the close of this angry man, you execute the sell trade. See that after the close of this angry man. And if you have done that here, you would have made profit. Remember I said this will not always play out because there are a lot of factors that determines price action. Okay? There are a lot of factors, a lot of things you need to consider. Fundamentals are there, the technicals are there. What we're looking at here is technical. So most times when it doesn't play out, it could be that a fundamental, the news was released. That's the reason it didn't play out. So in that case, you take that loss. Loss is just part of the business. It's inevitable. You will make some losses. You won't win all your trades. So All you have to do to be a profitable trader is to minimize your losses, and maximize profit. That's the secret to successful trading. Every trader lose money. We do lose money, but we ensure that our losses is very small compared to how much we make from the markets. Okay, so I want you to know that hanging, that should be hanging man, hanging man, hanging man. This one, right? Hanging man, inverted hammer, hanging man, inverted hammer, hanging man. Remember, this is an hammer, but because it formed in an upward trend, that is why it is called hanging man. This is also inverted hammer, inverted hammer. But when it forms in an upward trend, it is called a shooting star. Okay, so we've looked at six candlestick patterns. Six candlestick patterns. That's what we looked at. We looked at doji. We've looked at spinning candle. We've looked at hammer, spinning top, hanging man, and inverted hammer. Inverted hammer. So let's look at the last candlestick pattern. The last one, okay, will be engulfing candle. So I just want us to just finish on candlestick pattern today. Then we'll look at other strategies in subsequent class. Okay, so this is engulfing. What does it mean engulfing? When we say a candle is an engulfing candle, what do we mean? What do we mean? When a bullish candle closes above a bearish candle, we say that candle is a bullish engulfing candle. Let me show you an example on the chart. So for example, we have this here. The last candle that formed before this bearish candle is bullish. And what happened here? This bearish candle closed below the low of this candle. It closed below the low of this candle. So in this case, we would say this bear candle has engulfed this buy candle. Not only engulfed this buy candle, it engulfed one, two, three, four. I think 4 or 5 candles. It engulfed 5 bullish candles. So this candle is a bearish engulfing candle. So when a bearish engulfing candle forms, it's expected to form in an upward trend. If it forms an upward trend, you look for opportunity to sell. So these are a bearish engulfing. And you can see after the formation of this pattern, what happened? Price has been bearish. So this is what the bearish engulfing pattern looks like. And it forms in an upward trend. Bearish engulfing forms in an upward trend. Bullish engulfing forms in a downward trend. For example, we can say what we have here is a bullish engulfing pattern. This candle is an engulfing pattern. Why? It's closed above the high of this last bearish candle, this inverted hammer. So this can also be called an engulfing pattern. This is an engulfing pattern. We can also call this candle an engulfing pattern. Why? It's closed below the low of this last bullish candle. It's closed below the low of this last bullish candle. So we can also call this an engulfing candle. So in this case, this indicates change the trend from bullish to bearish. Okay, so let me show you more examples of engulfing. So you can see here also, this candlestick engulfed this spanning top. It engulfed like 5 or 6 candles, 6 bullish candles. So this is an engulfing candle. But as you can see here, it didn't play out because this candle goes far below the low of this spanning top. Personally, I wouldn't take this trade here at this point because the risk is too high. If I want to take this trade, I would have waited for price to pull back. If I want to take the risk, I would have waited for price to pull back this zone. This is where I would consider selling if I want to take the risk. This is where I would consider selling and not at this point. If I waited for price to pull back, as you can see, price pulled back. And even before price pulled back to this area, I had an opportunity to buy here because we had an hammer here, we had a bridge here. So I could have made profits buying from this point. I'll probably take my profits at this point. And after this candlestick close here, I could have looked for opportunity to sell. But if I had sold from this point, I would have made the with small loss on this trade. Probably the profit I made from this point that cover up for the loss I selling at this point. Are you getting me? So let me look for more examples. Okay. So we can call this engulfing too. This is an engulfing. You can see it engulfed one, two, three, four bearish candles. Just this one candle engulfed everything. So this is a bullish engulfing pattern. Bullish will form the downward trend, bearish engulfing will form in an upward trend. So this is a strong candlestick pattern. When you see something like this, there's a high probability that it's going to play out. Engulfing candles. Engulfing candles, they are very, very strong pattern. Okay, engulfing. So let's look for one or two more examples. And that will be all for today's session. Okay, this is an example of engulfing also. You can see it engulfed these two candles. And what happened to price? Price went up. You can see. So this is an example of a bullish engulfing pattern. Okay, let me look for one more example. Then that will be all for this class, this session. So like I said, if you start trading from next week, I expect you to take trades. Okay, I don't take people that will not implement. I don't like wasting people's time, and I don't like wasting my time also. So you have to start trading. You have to start trading. Next week, I expect you to show me a trade. Before we move to the next topic, you must have executed one or two trades using what I just taught you. This candlestick pattern. You must form the charts next week. So I expect you to identify them when they form on the chart next week and probably take a trade. Even if you don't take a trade, when we come up for class, the next class, then you have to show me those patterns on the chart that formed last week and you tell me what happened after those patterns formed before we look at the new topic. If you're unable to identify those patterns next week or you don't take a trade, then there will be no class. Okay, so you have to start trading. That's the only way to know how to trade. So let me look for another engulfing, one more engulfing. This is an engulfing also, you can see. This is an engulfing. This is a strong bearish engulfing pattern. Strong one. Bearish engulfing. This is a bullish engulfing. You can see this is turned engulf this. So this is a bullish engulfing pattern. Okay. This is also engulfing. You can see just this one candle engulfed 1, 2, 3, 4, 5. Almost 5 bearish candles. So this is a strong bullish engulfing pattern. Strong bullish engulfing pattern. Okay, Mr. Peter, so that will be all for this section. That will be all for this section. Any question? Any question? The session is being recorded, so hopefully before it could be available today. The link will be available today or by tomorrow. So I'll drop the link on your WhatsApp so you can watch the video. Okay? Watch the video again. You might not really understand everything that I shared in this session, so you need to watch repeatedly. Watch repeatedly so that you see. Okay. Any question? Any question? Any question? I think I will attend to your question in the next. Okay. You record it too. Okay. So okay, that's good. Then will be last one. Okay. So that will be all for this session. I appreciate you for and I hope you will implement everything that you taught in this class. Okay. So thanks for your participation. I wish you a wonderful weekend. Bye. Yeah, the next part I'll take your question.